Good day, this is Don Vic Philip. Today, I'll be taking you all on one of the most sexy and successful spiking strategy that you've ever come across. This strategy happens to be 90% accurate if you practice it accurately. Please, for every practice before you trade with your real account, try to backtest it on your demo account. What I mean by backtest, try to practice this strategy to become conversant with it before taking it over to your real account. Please, if you do this, I can assure you that yes, you will be a successful trader. Today, I'll be showing you guys how to predict spikes accurately. If you can see over here, in just less than 7 minutes, we're able to predict this sexy spike over here. I'm going to be showing you the profit. So this is the profit, cool $78 made in just less than 6 to 7 minutes of trading. This is one of the best spiking strategies you can ever think of, and I'm going to teach you guys how to accurately predict spike. That is the essence of this video. How to go against the market. That is what this video will be talking about. This strategy can be used by both new and old traders. Those who are versatile with the market and those who just recently came into the market. Let me close my profits. So I've just bagged in $75 currently. So the question is, how was I able to do this? It's quite simple. I'm going to give you a step-by-step guide. But first of all, let me start by teaching the new students, the new traders, what Forex is all about. Because it's not just wise to just start like that. Students, people need to understand what Forex is all about before they venture into it. Now, the question is, when you hear about Forex, what is Forex? Forex means foreign exchange. Yes, the abbreviation is Forex. The full meaning is foreign exchange. It involves the exchange of one currency or one goods over the other. For example, let's take your country as a case study. If, for instance, your country's currency, you exchange it to that of dollar or to that of any other currency like the euro, the British sterling, and so on, it means that in one way or the other, you have exerted what we call Forex. That is the physical aspect. If, for example, you also go to another country, there is no way your country's currency can be used in another country. No, you would have to convert your currency into the other person's currency, the country you are in. And in that, you have exerted Forex. It's not only currency that makes up Forex. No. We have the commodity, we have the stocks. Example of commodity markets, we have the gold, we have the silver, etc. There are so many. For the stocks, we have crash and boom, we have volatilities, and so many. As a trader, I specialize on only stocks, which is the crash and boom and the volatility indices. crash and boom, and volatility indices. Most people venture into Forex because they see the gains, they see the outcome of successful traders, how they spend money. They want to be a trader. But yet, do they know the sacrifice that these people took before they became successful? Most people, when they hear Forex, they look at it as being gambling. But I can put it to you that Forex is not gambling. Forex is a day-to-day activity. It is life. Forex trains your mind. It teaches you a lot about life. Forex will broaden your mindset. If Forex is taken as a game or is taken as gambling, you will end up losing so much money in Forex. Yes, that is one secret people don't tell you about trading is that you end up losing also. Why do you lose? Because you have no knowledge of what Forex, or maybe you are this greedy side that wants to make $1, $100 in a day. Don't quote me wrong, please. It's very possible. But then, in a percentage of 1 to 100, how possible is this? Forex is meant to be taken as a lifetime income. Forex is meant to be taken as a lifetime income. It shouldn't be taken as gambling or a get rich quick scheme, unless you will end up blowing your account. Forex can turn a millionaire into zero. And it can also make a poor man to become one of the richest men in his what country or in his society at large. Forex can give you a whole lot of respect. Forex is life. It's life on its own. Another reason why people do lose in Forex is this. They venture into the market without having what? Knowledge. They feel they don't want to pay for tuition fee. Yes, most traders, before you learn Forex, there's a training fee attached to it. It's a standard fee of $100. Some traders, most people that cannot afford these $100, they can be watching out for opportunities whereby some traders will give a promo. Like me, sometimes I go on a promo for those who are willing to learn Forex. I can just say for the first 60 people or for the first 70 people, $20. But the normal, the standard fee for Forex is $100. People will be like, is this amount not too much? But then, do you know how much that this knowledge or skill called Forex can give to you? And as a tutor, you're not just training them, no. You are giving signal. It is your duty to ensure that your students are profitable. It is your duty to ensure that your students are profitable. As you can see, it spiked again. Let's still take another trade. It spiked again. It's your duty to ensure that your students are what? Profitable. That is your duty as a Forex trader or as a tutor. Your students need to be successful in their what? Trade. So you'd also give signals and keep on checking up on them to ensure that yes, they are successful. So if you see, the $100 is not necessarily a criteria, no. It's more like a sacrifice. More like a sacrifice. Tuition fees are sacrifices that should be made. So most people they venture into first without having any knowledge. They feel okay, I don't want to have a mentor. I don't want to have someone that teaches me. Let me just start it like that. And at the end, you need to have a guide. You need to have a guide. Another reason why people do lose in forex, like I said, is lack of patience. When they are not even what patient enough. Yes, patience has a vital role when it comes to what trading forex. People would say, how? If you're not a patient person in life, forex will make you develop the act of what? Being patient. That is one thing about forex. It will make you develop the act of what? Being patient. This is forex for you. Now, like I said earlier enough, I would do a small tutorial, beginner's tutorial for those who are what newbies in forex. If you check my previous videos, you would see how I set my indicators and how I registered an account. But for newbies, I'm going to be showing you the market I trade on and how I set my indicators. And I'll first of all explain what the word indicator means. Indicator is a guide that tells you when to enter a market and when not to enter a market. It guides you, it gives you this insight. Okay, should I enter the market at this point in time? Is it perfect for me to enter now or is it late? Remember, not all indicators are 100% accurate, but most to an extent is 90% accurate when it comes to what trading. To an extent, most is what 90% accurate. Now I'll be showing you how to set my indicators. First of all, we're going to start with the Bollinger Bands, which is this what? Three green lines. The question is, what is this Bollinger Band used for? Your Bollinger Band is used to show you the trend of the market. Is it in an uptrend or is it in a downward trend? When we talk about downward trend, that means is it selling? If we talk about the upward trend, it means buying. For the newbies, the new traders, I mean, the green candles are the buy candles, the red candles are the sell candles. Green candles are buy candles, red candles are the what? Sell candles. Like I said, the Bollinger Band is used to show you what? Resistance and support also. It gives you a resistance zone and it gives you a support zone. The first thing I said is that it helps to show you the trend, whether it is an upward or whether it is a what? Downward trend, depending on how it may be. The second thing it does, which is your Bollinger Band, is that it gives you resistance and support zone. It tells you, okay, at this point in time, is there resistance in this market? Or at this point in time, is it going to buy? Is it going to support it? Let's talk about resistance. That means if, for example, let's say the sellers are in charge of the market, and we'll talk about resistance. That means there'll be a what? Opposite, an opposite reaction, which means the buyers will take over the trade. That's what I mean by resistance. Then if we talk about support, when we say support, if the sellers, for instance, are selling and there's a support, it will keep on what? Selling. That's what I mean by resistance and support. So that is the work of your Bollinger Bands, and this is how to set your Bollinger Bands. You click this F symbol over here. Then on your main chart F plus, you click your main chart, you click this symbol over here. Then you look for your Bollinger Bands, which is this over here. Then you set it exactly as you see here. I have set mine already, so there is no need for me clicking done. But when you are done setting yours, just simply click the done button. Just simply click the done button. Now, when you are done, you will see that these three green lines appear immediately. Yes, the three green lines, they appear immediately. The next indicator we're going to be talking about is this red and purple line over here, which is called your what? Moving average. It can either be classified as your moving average 10 and what? 12. We have four moving average and this chart, which is this red and purple line, this blue line, and this your black line. And each and every one of them do the same work. Yes, each and every one of them do the same work. In fact, they work together with your what? Bollinger Band. They work in accordance with your what? Bollinger Band. The same function of your Bollinger Band is the same function of your what? Moving averages. Just that the moving average tends to be more accurate than that of your what? Bollinger Band. Yes. It tends to be more accurate than that of your Bollinger Bands. Your moving average shows the trend of the market. Is it an uptrend or is it a downward trend? If it is downward, let's take in the case of moving average 10 and 12, which is this red and purple line. As you can see, it's going down, so it's in a what? It's in a downward trend in M1. In M5, it's beginning to go down. That means it's beginning to go on a what? Downward trend in M5 also. So the same thing this moving average 10 and 12 does is the same thing your moving average 48. If you notice, your moving average also acted as a resistance to push this price down. It acted as a strong resistance to what? Push this price down. So now, for a moving average 48, the same work your moving average 10 and 12 does is the same work your moving average 48 does also. It shows you the trend of the market and also acts as what? Both support and resistance. And it's a very powerful tool when determining spikes. That means going against the market. To be a profitable trader, you must learn to what? Go against the market. The next thing we'll be talking about this your moving average 200. Your MA is called exponential moving average 200. You see this black line here, you see here. Respect this line. Respect this line. I will go more in details on what the strategy is all about. I'm just trying to do a summary of my indicators. Please ensure you respect this EMA 200 because it is a very powerful tool. Very, very powerful when it comes to trading Forex. It acts as both support and resistance. Yes, it acts as a great support and resistance. And I will give you instances where it occurred. I would give you what instances when it occurred. Now, to see the next indicator, okay, let me be showing you how I installed my indicator. Like I said, for every indicator you are installing, you click on this main chart F plus. This is your moving average 10. This is the setup for it. When you're done, you click on your done. This is your moving average 48, the blue one. When you're done, you click on done over there. This is the moving average 12. Then this is the exponential moving average 200. That means the black line. When you're done, you would as well see it like this. Yes, it's gonna be like this. Totally like this. This is how it is gonna be. Exactly how it is gonna be. Now, like I said earlier before, the next indicator we'll be talking about here is your ADX. What is the work of your ADX? Your ADX tells you when a market is consolidating. That means when a market is stable or unstable. If a market is unstable, it will go below this what? This green line you see over here would go below this level 25. And a market that is unstable, it is best to avoid such markets. Why? Because it can end up being deceiving. What do I mean being deceiving? There's what we call pullbacks. A lot of pullbacks will keep on occurring when your ADX is what consolidating. But if your ADX, let me consolidate, that means if it's a little bit below this level 25 line, but if it is way below this level 25 line, let's say it's something around this spot, we should expect that there will be a series of spikes. Like the spikes will be excess. Yes, the spikes will be immediately this your green line can cross this level 25. If it crosses to this spot, the market is still shaking. Nobody has taken control yet. But if it goes way below this spot, you would see series of what? Spikes. What do I mean by spikes? Let's take for instance crash market, crash 1000 market, for instance. When we say spikes, that means we are going against the market. That means we are targeting the sell candles. Example of sell candles are these red candlesticks you see over here. Remember, this is my M5 time frame. This this is M1. See M1. These are what examples of what spikes also. Example of what spikes also. Now, like I said, your ADX tells you when the market is what consolidating. The next one we're also going to be looking at is your ROSI, which is your what relative strength index. Yes, it's called what relative strength. Okay, let me show you the way of setting your ADX. You click on this, your F symbol still. You click on the main chart F plus. When you click on main chart F plus, you look for what average directional movement index. See it over here, the top one. You click on it. So you can see period 14, your style 4. It's more like a green color. Then your plus DI, please your plus DI and your minus DI. If your interface is black, please put this your plus DI and minus DI to what? Black colors. But if your interface is white, please use a white color because it is not meant to what? It's not meant to show. It's not meant to what? Show. Then your level 25, you click on it, you click on the level. Then if you want to add a description, you can just click here. It will simply come up, but I don't need it, so I will delete it. If you want to delete, also you click on that word basket, change it like this, then go back and click on what's done. When you click on done, you are what? You are good to go. The next indicator we're going to be looking at now is your relative strength index, which is this. You can as well do the setup, the period, the 10, apply to close, style, to pixel, view. You come over, you write it down like this, you set it up like this. Remember, you keep on adding these lines by using what this plus symbol here, add. This is your delete. A scenario whereby your plus symbol is not working, you can just simply click on the delete icon first of all and exit and just click on it again. Then you click on the plus symbol, it will automatically comes up again. Let me delete it because it's not really useful to me. Now let's go back to the chart. Oh, actually set up something wrong here. Okay, if I want to delete a indicator, I can just simply click here and yes, I delete, and my chart comes back to normal. Most new traders will start panicking that something is wrong with their chart, but it's very simple. When your chart gets destabilized, you can just as well take it back to its normal way by just using the delete symbol. Now, like I said, we're talking about this your ROSI. Now there are three key levels which you all need to understand when using your ROSI. The three key levels you need to understand are what? Level 70, level 50, and level 30. I'm sure you guys are seeing 5 levels there, which is level 90, 70, 50, 30, and 10. But the three key levels you all need to understand is your level 70, your level 50, and your level 30. These are three main key levels that need to be understood. or understood when trading the forex market. Your function of your ROSI is that it gives you an entry point. It tells you when to exit the market. Please, when using indicators, use it in combination with your what? With your strategy. Yes, just don't jump into using indicators like that. No. When combining indicators, please combine it with your strategy. That is the only way it can be very effective to you. Just don't take trades using indicators alone. Like I said, indicators are not 100% accurate. Please have that in mind. They are not 100% accurate. They can also fail you. Indicators can be what? 90% accurate. Please have this at the back of your mind. When trading Forex, using the indicators, combine it also with your what? Strategy. Don't depend on only indicators when trading the Forex market. Don't depend on only indicators when trading the what? The Forex market. So after the three zones, we have the level 70, level 50, and level 30. The level 70 is called the overbought zone. The overbought zone. What do I mean by overbought zone? If you look at this place, this is the line. The moment it passes this line, we should be expecting what we call a spike. Yes, a sell can occur at any point in time whenever it passes this year what? Level 70 zone. That means the buyers have what? They have overbought. If you look at these previous zones, you will notice that immediately it passes, let's say for example here, as it passed, as it bought, as it bought to reach this level 70, it was the sellers dropped price down. The same thing occurred at this very zone again. So the moment it passes this level 70, this level 70 acts as a what? Resistance. Yes, it acts as a what? Resistance. The moment it passes it, we should be expecting a fall. Or if in the case of the boom, we should be expecting a buy. While in the case of the crash, we should be expecting a sell. So the same thing occurs in your oversold zone. When your listing has beaten out of this level 30 zone, what happens? It starts what? By a scenario whereby it beats out of this oversold zone and it still keeps on selling. Yeah, that sometimes it keeps on doing like that. When it reaches this extremely oversold zone, which is your level 10, we are bound to see a what? Reversal. Yes, we are always bound to see a reversal when it reaches this extremely oversold. It's very rare for it to what? Break out from the zone. And it's very rare for it to break out of this your what? Extremely overbought zone in your level 90 margin. So your ROSI has plays a vital role when it comes to what? Predicting spikes accurately. Your ROSI plays a what? Plays a vital role when it comes to predicting spikes accurately. Your stock just gives you an entry point and an exit point. Your stock gives you an entry point and exit point. But in some cases, you don't actually need your stock. Yes, you don't need your stock. So you can as well remove it. You don't need your stocks. So like I was saying, these three indicators I just showed you now, how to set your moving average, your Bollinger Bands, your ADX, and your RSI. These are the what few fundamentals that is needed, and these indicators must be combined in addition to your what strategy. Please, before using any of this indicator or using any of the strategy, as you can see, it did exactly what we just said at this very point. See how accurate your level 70 zone is. See how accurate your level 70 zone is. Why? Because it was able to what beat out from this level 70. So at this point also, when it occurred, we could have still decided to what take a sell if we so wish. And I'm still seeing it falling again. Yes, I'm still actually seeing it falling, and it will. Now, like I said earlier, this your stock, like I said, is not actually necessary. So let me just simply remove it from my screen. Okay, good. Now, before you start trading, now this is where the strategy comes in. Please, you guys should try and understand this video. Try replay this video over and over again, because it is in this video that your success in Forex lies in. It's one of the most powerful spiking videos that you can ever watch. So please keep on playing it to where you don't understand. Try practicing what you see being displayed over here. First of all, when you come into the market, now this is where the technical analysis of trading comes in. Remember, trading is technical. It is what? Technical. So we call technical analysis. I'm sure most traders here don't really know a lot about price action. But this I want to explain now will give you an insight on how to accurately what take trade. You don't even need a robot to see you're taking a trade. No. With this information you are getting from this video, you will be one of the best traders you can think of. Now, first thing to do is this. When you enter the market newly for the day, you just don't jump into trade. No. The first time frame you should ever check when you are taking a trade is your what? D1. Yes. How do you check your D1? You click on the screen and you go to what? D1. Now, from the knowledge you have from all these indicators and everything, looking at D1 now, remember I said that is the first thing that needs to be done when you come into market. The first thing you need to know in your D1 is you need to identify what we call support and resistance zone. For example, see, from this very spot to this very spot, there was a great force. Yes, there was a mighty force that was pushing these candles down. There was a mighty force that made the sellers take advantage of the what? Of the market. There was a force behind this fall. If you use your strategy, like I said earlier, say your Bollinger Bands act as what? Both resistance and support. Now let me take for example as this very spot. If you notice, it couldn't what break out from this what upper Bollinger Band again. So what happened? It got what reversed to a sell. It got what reversed to a sell. Let's go back a bit in your D1. Look at this place from this very spot to this very spot. From this upper Bollinger Band, it couldn't break out anymore. When it reached this upper Bollinger Band, the sellers took control of the market. The sellers did what? They took control of the market. When it reached this upper Bollinger Band, when it reached this lower Bollinger Band, this very zone here, the lower Bollinger Band could not resist it anymore. Yes, it could not resist it anymore. At some point in time, what happened? It was it broke out. Can't say at some point in time it broke out. But then at this spot, there's a great resistance. You can draw our resistance line from here. What how do you draw resistance line? Resistance line is drawn from two what? From two known resistance points. From two known points at which there was a reversal, a clear cut reversal. So let's draw a trend line. Okay, let's carry it over here. At this spot, there was a what? There was a great resistance. Can you see? At this very spot, there was a what? There was a great resistance. At this spot, there was a great resistance, and that is why when the sellers pushed price from there to this very point, when it hit this resistance point, it stayed buying. It stayed what? It stayed buying. Now, at this very spot, when it reached the upper Bollinger Band again, what happened? There was a resistance. So, what is this key thing trying to tell you now? That your upper Bollinger Band, your lower Bollinger Band, and your middle Bollinger Band acts as what both what resistance and support zone. Very powerful ones when it comes to your what higher time frame. It tells you what would happen for the what for the full day. As you can see, what happened here. These upper weeks, this week you see over here, this one that you see, or let's just use for example from here to here, this top one that you see here, it shows that the buyers bought up to this very extent, but towards the ending of the day, the sellers pushed price down. The sellers pushed price from this very zone to this particular point. This particular point. That is what the sellers did. They pushed price from this very zone to this what particular point. Why? Because your upper Bollinger Band acted as a very strong resistance. It couldn't beat out of your what? It couldn't beat out of your upper resistance zone. Now, when the sellers took over, when it reached this particular spot again, what happened? Which is this middle Bollinger Band, there was a what? There was a support here. Remember, the top part of the candlestick acts as a support, while the downside acts as a resistance. And remember, if you want to follow the market in terms of crash, you buy. If you are going against the market, you do what? You sell. So at this spot in time, this middle Bollinger Band acted as a very strong support zone that pushed price back, that made the buyers what take control until it reached this very spot in which the what upper Bollinger Band couldn't sorry in which the candlestick couldn't break the what upper Bollinger Band. Now, there's something you should understand about the strategy of upper Bollinger Band is that if it breaks out from your upper Bollinger Band, it's going to keep on buying. If it breaks out from the lower Bollinger Band, it's going to what? Keep on selling. But it's scenario whereby your Bollinger Band acts as resistance and support, a reversal is going to occur. For example, if to say, let's say, as this very spot here, let's just take this spot as a case study. If you notice, the buyers pushed price up, right? Yes. That means you should have been expecting. Remember this. If you know the kind of candlestick formation, please, you guys should learn it very well. If you're my students, I sent a PDF on that candlestick formation, which would make you to be a profitable trader. If you notice your candlestick formation, you will notice that this particular thing that happened there is a reversal pattern. It's a reversal candle. But let's not go into that first of all. Now, okay, let's take here as case study now. When it reaches lower Bollinger Band, for a trader seeing this spot, if this day turns out to be a buy candle, that means we should be expecting that the next day is going to be a what? Buy candle. Whenever it reaches your Bollinger Band and there is a reversal, that means you should expect that the next day that reversal is going to what? Occur. Like you see as occurred there, as the sellers push price down, the next day price was still what? Pushed down until it reached this middle Bollinger Band. And when the middle Bollinger Band was able to resist it, the next candlestick became a what? Buy candle. The same thing flowed all through to this very spot. So at this very zone, from what we see, yes, what does it tell us? It tells us that at this spot, this is a what? This is a clear evidence that it broke out from your what? Lower Bollinger Band. So that was what caused this what great sell. And if we check our W1, our W1 will also show us something related to this. See, our W1 was meant to complete to this what very zone at which there was the what at which there was resistance. Now, what makes this spot a resistance? That is because no candlestick has been able to beat out from the spot. Check it out. Throughout all these candlesticks you see here represents what? 1 week, 1 week, 1 week, 1 week, 1 week. All of them here represents 1 week. Yes, all of them here represents what? 1 week. At this very spot now, if you notice, it has what? It has hit this resistance spot. So we should be expecting that the spikes that we are trading on is going to what? Delay. It was what? It was bound to delay. Why was it bound to delay? Because this week has already hit this what? Resistance zone. And before it can get out of this resistance zone, it would what? It would take time. This is for your what? W1. I'm trying to analyze and show you what led to this what? D1. Remember, if you want to understand or know what led to what led to what happened in a particular time frame, please go to a higher time frame. For example, D1 now. I'm trying to show you all why there was a strong sell from this very spot to this very spot. It's all because of your what? W1. Your W1 needed to hit resistance zone. Your W1 needed to what? Hit resistance zone. Your middle Bollinger Band here acted as a what? As a resistance, which was pushed price down. So in order for this candlestick to complete, it needed to what? Hit resistance zone. So now, concerning for this week now, nobody knows if it's going to break or it's not going to break. For a trader who trades using the week, trader can decide, okay, I won't trade throughout this week on crash 1000. Why? Because he is not sure. So it is the outcome of what would happen the following week. Let's say what will happen this week, then he will now start taking trade on the following week. But if here reverses to be a buy candle, then we should be expecting a buy candle in 2 weeks' time also. But if it can break out of here, that means we should be expecting series of what? Sell candles. We should be expecting series of what? Sell candles. So now let's go back to our what day one. These are the little analysis that needs to be done first before what taking trade. Now from your analysis, you should know that your D1, that means today, is being what resisted. Yes, today is being resisted. It's a very, very, very strong resistance. So we should be expecting series of what rise and fall. That means the candlestick would not what actually be stable. It might spike, it might not spike. Buyers can move up price or it can what sell, because at this point in time, buyers are meant to what take over. Buyers are meant to take over. So for some people, they will decide not to what trade this following day. They will decide not to trade this day, but trade the following day. Now, after analyzing your D1, you go over to your H4. Remember, we've analyzed D1 and we've noticed that the candlestick is now consolidating. Now, look at what I mean by consolidating. When it was at this spot, consolidating from here to here, if you notice, if you notice from here to this very zone, if you notice there was what there was series of rising and falling. These upper wicks you see here indicates that the buyers pushed the price up or the sellers pushed price down. So this present time, someone might end up losing what so much money. See, the same thing occurred at this very zone. There was a bit of confusion in the market on who would what take over. And whenever you see market consolidating, that is when you really notice resistance and what support zone. That is when swing trading comes in play. This is when what swing trading comes in play. Please take note of this. This is where swing trading comes in. So now, after analyzing your D1, you can as well go to your what H4. You can see it. You can as well go to your what H4. Now, let's look at what H4 is talking about. There's something we should notice about this H4. Sorry, I've moved my resistance zone. Okay. There's something we should notice about this H4. Now, if you notice, at every instance where when it reached this what either middle Bollinger Band or your moving average, there was always a what resistance. That means, see for instance, when the buyers pushed price to this spot, to your middle Bollinger Band reversed it to become a sell. The same thing occurred here again. This one was work of a moving average and middle Bollinger Band. The same thing kept on what occurring. So now the question now is, would this same moving average and middle Bollinger Band push price back to a sell today? Like, will it make it in such a way that this your D1 will break out of this resistance zone? Because from what I see here, there's very strong what resistance point. A trader can decide to wait till evening. Yes, a trader can decide to wait till evening. Sorry, the pop-up there is my group chat, boom and crash. Yeah, so if you want to still join, you can as well contact my number below. You can as well contact my number below. That's my students over there. They're actually trading. So sorry for the interruption. As I was saying, the question is, for some traders to decide not to take trade. Yes, but for scalpers, it is their ability to determine when to go against the market, how to accurately predict the spikes. So if you go to your H1, Now your H1 has showed you that this what this moving average. Remember H4. What did your H4 tell you? Your H4 is telling you that it might what this moving average might push you down, or what it might keep on buying to it, which is this what moving average, this middle Bollinger Band. So now anything can happen in your what H1, and as you can see, because of this consolidating nature of H1, that is what made this trade to not what enter. We just took it without analyze, and this is one of the results people would lose when they do what take through without what analyze, like I just did now. So let me just close my market and wait for a what perfect entry zone. So like I said earlier enough, if we had analyzed this market, we would have noticed that this particular spot is going to be a what confused market. We just entered trade like that. So this is exactly what I said about your ADX. When it consolidates, the market is what unstable. You will see series of what buy and sell, and your moving average here, from what I see, acted as the was support, which would push price up. So for now, for this crash 1000 market, we would avoid you what trading on it. Yes, we would avoid trading on it, but from analysis, we would see a great fall very soon. Yes, from analysis, and most especially if it is able to beat out from this what resistance zone. When it beats out from this resistance zone, we will see series of what sell candles. Please learn to draw your support and resistance zone. Learn to know how to identify trending markets. Learn to identify the word trending markets. Is it in an uptrend or in a downtrend? And how do you identify this trend? Using your what higher time frame, either your H4 or your H1. So from our analysis here, you notice that this is a what that is using H4. This is a what trending market. It is what on a downtrend. See, from this very zone to this very zone, it has been on a downtrend. This one has been on an upwards, an uptrend. So even your H1 also, if you notice, it has been on a what? On a downtrend. So that is why the sellers are what? In control. So your middle Bollinger Band actually tell your moving Bollinger Band, I mean, tells you the trends of the market, even that of your what? That of your moving averages. Now, if you notice, something we should learn about this EMA 200. When your EMA 200 is above the Bollinger Band, it's on a what? On a downtrend. When it is below, it is on an uptrend. For example, at this very spot, it was trying to go on an uptrend. That is why your EMA 200 was already trying to take shape below the what? Below the Bollinger Band. But then, if you notice, your H4 was already what consolidating ADX. That was what made this your moving average to be what straightened up. It was straight up. It was not really that's not you taking a decision to go up or go down because of your what ADX. So at this point in time, just avoid trading or be precise. What I mean precise in terms of understand that the same spot at which a market got reversed is the same spot that it will also what get reversed. Look at so the period it was able to get out of your ADX zone from here, you now notice that your what your EMA 200 started taking its shape. You know whether it's going to fall or not, like it did over here. As you can see, it did it over here. The same thing goes to your H1. See, it is above your Bollinger Band, so it's on what? It's on a downtrend. Let me push it back for you. You see it's above. So it's not by it was what below, as it's below here now. It shows that it was on a what? It was on an uptrend. So, like I said, your moving averages shows you uptrend and downtrend, and not just that, it acts as a very great resistance zone. when it comes to what trading. You can see it over here. Whenever it hits this particular black line, it keeps on what falling down. So it's a very powerful tool when it comes to trading. So now from this our analysis over here, we'll notice that for now it's not advisable to do what take any trade in your crash 1000, most especially at this point whereby your ADX is what consolidating. If you check M30, okay, the same thing goes to M30. You might be looking at a spike over the spot now. We might be expecting a spike at this spot. Why did I say so? Because of your what moving average 48. If you look at previous times that occurred, you will see that whenever it reaches this moving average 48, there was what a spike occurred. Yes, look at it very closely. The same thing occurred at this zone also, at this very zone. So maybe at this also zone here, we should be expecting a spike. So there's one thing you should learn about predicting spike is that the fact that you've seen that at this spot a spike would occur, it doesn't necessarily mean you should first of all take a trade. No. When predicting spike, you must allow one spike to occur before what predicting another spike. Yes, you must allow a spike to occur before doing what? Predicting another spike. Like the same thing that occurred at this very spot. We knew here is gonna spike, or we allowed this thing to fall before we knew this next fall. Because of this demarcation, that was why that trade was taken. This trade was taken without proper analysis. Whenever there's a demarcation like this, you should be expecting what? Series of long sales. And that's what gives us this confidence that today is going to be a sale that would what? Cover up for this what? Demarcation. So because of this demarcation, we quickly jumped into trade that got us that loss without what? Proper analysis. So that is what happens when you don't do what? Proper analysis. You end up what? Being in loss. So before taking any trade, you must do what? Proper analysis of that particular market. Yes, please properly analyze that market. It is very vital. Properly analyze the market. Properly analyze the what market. Now, as you can see at this very spot, it has beaten us from your what extremely overbought zone. So we should be expecting a spike at any point in time. If you look at your M5, anything that makes your M5 move out from this level 70, expect a spike. Like right now, we should be expecting a spike from now to what? 10 to 15 minutes. A spike must occur to do what? To push price down. Why? Because it has reached your level 70 zone. And when it has reached the level 70 zone in M5, this is very, very accurate. Yes, it's very, very accurate. If you notice, see, it hardly passes level 70. Look at it, even at your previous time. So trading, it's not necessary for you to get all the spikes. No, no, you don't get all the spikes in trading. One or two spikes can get you your profit for the day. You can actually you can actually be a disciplined trader from what trading using what indicators are your strategy. For example, I can decide I won't take trade for the full day until I notice that my M5, my what, my ROSI has reached my level 70 zone. Then I can just decide to take a what sniper entry. What do I mean by sniper entry? I can decide to take my whole lot size. Let's just say a huge lot size just to what get that one spike because I am sure that when it reaches this level 70 zone on my M5, then there must always be what a fall, or that is in terms of crash 1000. But in terms of boom 1000, there's gonna be a what a buy. Please try and understand the small language I just did now. If you notice at this very spot, whenever it reaches level 70 zone, there's always a what? There's always a spike. There's always a reversal. See, yeah. When it reaches at this spot, one can decide to say, okay, fine, I'm taking trade. Why would one take trade? Because it already hit this margin. So which led to this what? For most people, they prefer to what? Wait for what? They prefer to wait for the first spike. I'm very sure at this. Okay, let's trace the spots. That was the what? October 10, 850. Okay, let's trace it in your M1. See the spike that occurred. So at this point, when it occurred, there was what? Emma. Emma is there to hold it. And if you take it in combination with your M15 candle, let's trace it. That should be 845. Since it occurred 850, you notice that also your moving average was there to what? Was there to stop it. The moving average was what? Was there to what? Stop it. That was why it didn't what? It didn't keep on falling as it was meant to be. There was what resistance that made it not to fall. That is why I say in combination with your what strategy, in combination with your strategy, always use your what indicators. Don't use your indicators alone, please. It's very, very wrong. Please and please, don't use indicators alone when trading forex. Combine it with your what strategy. Combine it with your strategy. Please combine it with your what strategy. Now, let's check other markets. I'm sure we have done a bit of analysis on Crash 1000. So we should be expecting a spike any point in time. Why? Because of what has happened here in your M5. M5 is very powerful when it comes to your ROSI. Please take note of this. There's a robot that is also built for this. It notifies you whenever your M5 has what? Passed your level 70 zone. And at that particular spot, you're expected to what? Take a trade. Please, it is very accurate. Let's go to Boom 1000. Remember, wow, it has been buying. Remember, the same thing occurs in Boom 1000. You first of all analyzing your what? D1. After analysis of D1, you gradually go to your H4, H1. Okay. From your H4, you get your resistance and support zone. You go to your H1, go to your M30 and M15 before you now privately go to your M5. And what you're looking at for M5 is mostly this your what ROSI. And as you can see over here, what led to this series of spikes was because it had already beaten out of the what oversold zone. So at this particular spot, when you notice it has already hit your oversold zone, someone can decide to take a trade at this very spot, expecting that yes, using proper risk management, using your lot size accurately, expecting a spike. And when it occurs, you should know that there will be series of what buys, which led to what this. Whenever there's a hit, it hits your oversold zone or it passes it slightly, please expect series of what spikes. I have explained this thing before to you. Expect what series of spikes. The same thing occurred at this zone. Look at it over here. When it hit your oversold zone, what happened? Instead, what going up, and this occurred in what your M5. So please take note of this. It is very vital to please take note of this. And exactly as we say, let's go and check our Crash 1000 to be sure if a spike occurred. Wow, 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 wow. Exactly as we want. as we predicted it to be. Exactly as we did what predicted it to be, it fell. Please take note of this ROSI in M5. It's a very vital tool. If someone had said to take a sniper entry at this very spot, or you can use ROM, that is risk management, the person should have been in huge profit by now. See, at this very zone. Look at it when it hit this your words M5. It pushed price down and we're still seeing it what falling. Yes, we are sure of it what falling because of why it has reached your what M5, your level 70 zone, and then it needs to cover up for this what for this demarcation that happened in your M1. So with this, if you can master this act of trading, you would be a very what successful trader when it comes to what trading the forex market. Please, this strategy works for all time frame, yes, and not just that, it works for all markets, be it your crash, your boom, and your volatilities. It works for it. So please try as much as possible to backtest it using your what demo accounts. You don't use real accounts to trade. I'm using real accounts now to teach you guys because I'm sure of what I'm doing. As you can see, I'm not even taking much trades. Why? Because I'm holding a lecture. I just showed you an example of a trade at the beginning stage. But you see this strategy that was worked on now, please try as much as possible to do what? To practice it. It's very important to what? Practice this video. Please and please. So you can also check here, like I said, this is my profit for a week. $16, close to 20K dollars made in what? Less than 7 days, as you can see. Last week profit. This is my trading history. Yes, there must be what? Loss. Any trader that tells you there is no loss, no. That trader is not a trader. To become a profitable trader, you need to understand what it means to what? Maximize profit and minimize loss. Forex is not a get rich quick scheme, like I said. It is your ability to what? Maximize profit and what? Minimize loss that makes you a profitable Forex trader. So imagine making this in 7 days of just what? Trading. I mean, this is block money for most people. So this is my trading history. Profit, 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 few losses, and what? Profit. So in order to be a professional trader also, just try as much as possible to practice more on this video. Yeah, as you can see, it's still fell again. Yes, it's still fell again, and we're still expecting it to fall more, like we said earlier, to beat up for this what? Demarcation. So we're expecting a greater fall still. So please try as much as possible, as I said earlier, to practice more on this strategy, on how to accurately what? Predict spikes. Please practice with demo before what? Going over to real accounts. It spikes from our strategy. Like I told you guys earlier, like it's gonna fall, and exactly what I said was what happened. So this your M5 is a very strong and powerful tool when it comes to what? Trading. Your RSI M5 is a very strong and powerful tool when it comes to what? Trading. Yes, guys, look at it exactly how we predicted earlier on. It fell and fell and fell in order to beat up the previous demarcation, like I said. That demarcation is a very strong indication. Very, very strong indication. See, it's started falling and fell down very well. So by now, if you follow my strategy, you should be in massive profit. Wow. And if you notice, like the exact spot we drew our resistance, it hit that spot and is beginning to what? It's beginning to reverse. So have you now seen that this strategy is one of the best cycling strategy you can ever think of? Please do well to please just click the like and subscribe button if you found this video educative, and do well to practice it. Thank you so much.